I think the last time I was on the Metals Investor Forum was probably back in 2018 by request of Jay, and that was during a time when we were looking for gold production at Calibre. And so it's great to be back on, and now after all the work that we've done, a multi-asset gold producer. We've got a plethora of exploration potential, which I'll talk about, resource extension drilling that we're doing, and new discovery drilling. And really, this story is about delivering on our commitments, and I'll talk a little bit about that. So yeah, Calibre trades on the TSX under the symbol CXB, and on the OTC under the symbol CXBMF. Yep, I'll be making some forward-looking statements. So with that, just discovering a little bit about Calibre, our team, as Jay mentioned, we've been involved in the resource sector for decades. Myself, over 15 years. We've put together a number of copper gold resource deals that have been quite successful. Jay mentioned Terrain Metals, as well as New Market Gold, where we acquired gold production in Australia. Our team saw some geological opportunities to expand resources. Douglas Forrester, Blaine Johnson, Doug Hurst, Raymond Threlkeld, to name a few of our core team members. They saw the opportunity there in Australia, and evidently were successful. We made one of the highest grade underground discoveries at a mine called Fosterville, which we now have financial engineered in 2017 and did a merger with Kirkland Lake Gold. Has gone on well. That's a core part of our team here, as well as our CEO, Russell Ball, was 20 years at Newmont. Our Chief Operating Officer, Darren Hall, was over 25 years at Newmont as one of their key operators there. So a very well-rounded team. You can see there on our execution, Q1 production was a consolidated 42,000 ounces of gold. We had record production from one of our mines called El Limon. We're advancing one of our development stage project called Pavon. And then just a little bit, I'll talk a little bit about our opportunity in terms of we see these operations going and how we're advancing this, what we call hub and spoke approach to operating. And then we're advancing a almost 60,000 meter drill program on these assets. So we do believe, again, like we did at Newmarket, we believe there's some great exploration upside. Some of the recent highlights here, as Jay mentioned, we had now a multi-asset gold producer. We delivered on our Q4 production numbers. So we acquired these assets from B2 Gold in the third quarter of 2019. We raised a little over 100 million Canadian to acquire the assets, and B2 Gold is our largest shareholder. B2 Gold sold us these assets for cash and shares. You can see on the right-hand side there, they own a little over 34% of Calibre. But really, our story is 120% focus. So you can see there, Q4 delivered on our cost, delivered on our production. Q1, again, delivery of production and our all-in costs around $1,000 an ounce. And these assets are generating excellent operating cash flow, but they're also generating great free cash. You can see there at $1,580 was our average realized gold price in Q1. We generated just a little over $10 million in cash and added cash to our balance sheet. So currently sitting at $43 million in cash. Next bullet there, about some of the highlight drill results we've announced over the first few months of operations in 2020. You can see some excellent widths, some excellent grades. And then we announced back in February of this year a strategic deal with Rio Tinto on some of our exploration assets up in the northern part of the country. Assets that have skarns, epithermal veins, but also very large bulk tonnage copper gold potential. And so after 18 months of negotiations and discussions with Rio Tinto Exploration, we struck a deal with them to earn in on our Barosi concessions, as well as a strategic alliance within all of Nicaragua. This is a jurisdiction Rio was not in prior to Calibre, prior to us. So it's great validation for the jurisdiction. I'll talk a little bit about this hub and spoke approach. So we look at Nicaragua as our landscape, our canvas, if you will. We've got two processing facilities. They're called Limon, which is a 500,000 ton per day facility, and Libertad, which is a 2.2 million ton a year facility. So a total of installed processing capacity is 2.7 million tons. And then the spokes are the number of ore sources we have around the facilities, as well as a development stage project called Pavon. So you can see in the slide deck there, an average grade of our resources at Limon ranges about 4 grams per ton, as well as at Pavon, we put out a resource estimate. Today, it's 300,000 ounces, 80% of which is indicated resources, but with an average grade of 5 grams per ton. So these are small, shallow, high-grade open pits. So what we envision here is an opportunity where we can haul ore around the country very effectively. We demonstrated that actually on production numbers. So 20% of our metal production came from at the Limon processing facility, at the Libertad processing facility, came from ore sources up to 250 kilometers away from the actual process facility. So Q1, we were able to demonstrate our opportunity where you can haul ores around very cost effectively. We're recognizing that the cost to do that is about a half a gram or $25 a ton to haul ores from Limon and Pavon and process it at Libertad. So we have a unique situation of this hub and spoke approach. Just diving into that in a little bit more detail in the next slide, slide 6. As I mentioned, we put out this updated resource estimate at Pavon. So 230,000 ounces at 5.1 grams per ton gold, about 70,000 ounces of inferred resources at similar grades. So we're developing that project now. We're advancing the exploitation permit. We anticipate to have that approved by Q4 of this year. We're going to be doing a 10 to 15,000 meter drill program in the second half of the year at Pavon. You can see there a few high-grade intercepts from the project. The last time this project was in 2014. So yes, we think there's an incredible opportunity to expand resources at Pavon. And we envision that Pavon will be an ore source fed into the Libertad facility in a meaningful commercial way by Q1 or Q2 of 2021. So this is what the metal production could look like. What we're looking at here is the La Libertad processing facility. So on the left-hand side, you can see the different colors: yellow, Limon ore, gray. On the left-hand side is lower grade stockpiles, average 0.4 grams per ton gold, heavily underground and heavily antenna. Those are ore sources feeding through the Libertad processing facility in 2020. On the right-hand side on that same chart, you can see the potential up to 2022. So the processing in the mill actually goes down. The throughput will go down. But in the middle, you see the metal production. This year, we're guiding for 70 to 75,000 ounces. But by 2021, 2022, that metal production will increase, largely because we're going to be processing higher grade ores through the facility. So a very opportunity for us to maximize value at this Libertad operation. On the far right-hand side, you can see what the consolidated production profile could look like. You can see 70 to 75,000 ounces coming from our Limon operation, 70 to 75 from Libertad. That's in 2020 this year. Now, we have withdrawn guidance for this year because our operations are on temporary suspension. They have been for the last month and a half due to the pandemic. So we're looking to bring them back up in the next, hopefully 15 to 30 days. This is a self-imposed temporary suspension to ensure the health and safety of our employees. But you can see where the production could go, assuming all of these ore sources come together. And these are based on current resources we have in the portfolio. Nothing new. But what it highlights here is the opportunity for organic growth potential going through our facilities. And what's really important here is the opportunity that with exploration success beyond this, we have 1 million tons of excess installed capacity at the Libertad mill for any new sources that we find. And hence the reason why we are very focused on doing early stage, advanced stage, and resource expansion stage exploration drilling in 2020 and 2021. With that, I'll quickly go over to the El Limon mine complex. What I'm showing you here is a small, is a very small snippet of the overall land package. You can see right in the center there our mill, the Limon vein structure. We've been drilling. We think there's excellent expansion potential at Limon Norte, further to the north, further to the south. This is a high-grade open pit that is feeding our mill. At Limon Norte, back in February, we announced some very high-grade drill results. 18 grams over 5 meters, 12 grams over 5 meters. And then at Panteon on the bottom right-hand corner, a new vein structure that's been discovered up to 17.8 grams over 10 meters of true width. So we're very excited to get back in there and start drilling upon resumption of operations. Just showing a long section along that high-grade vein. The darker gray zones are the surface open pit resources that we're currently mining at Limon Central. The red line outlines the pit shell boundaries that have been defined at $1,400 gold. And these are some of the new drill results you can see there at the bottom of those designed pits and where we think there's opportunity for expansion. The next slide is showing a little bit more detail on that Panteon vein structure that we've discovered. You can see there on the right-hand side in a cross-section. This is only located about 100 meters away from underground infrastructure, but very high-grade results, 17 grams over 10 meters, 10 grams over 5, 17 grams over 4. And we think there's a lot of exploration potential beyond what we know today, along strike and down plunge. And again, we'll have 2 or 3 drill rigs operating there upon resuming operations and exploration. At the Libertad operation, these are the 3 mineral concessions that we own. Down at the Libertad proper, where the long light brown gold trend is, that's where in the yellow stars where our operations are. Over 1.7 million ounces has been produced from that Libertad concession. Up in the northern part there, you can see a small target called Amalia. We've had some initial drill results there, very underexplored. We were the first company to drill up there, so one of the first intercepts was 7 meters of almost 18 grams per ton gold. A larger land package than Libertad proper and only 30 kilometers away from the mill, so we think there's great opportunity for new discoveries and some resource expansion, that new target as well. Quickly touch base on this Rio Tinto partnership. So these concessions that I'm showing here on the right-hand side are up in the northern part of the country. Again, Calibre's been exploring in country for well over 10 years now. And we'd outlined 2.4 million ounces of inferred resources. We had brought in partners over the years. At one point in time, B2 Gold was an earn-in JV partner. On the green there on the right-hand side, IM Gold is an earn-in partner. A small junior, Reseda Mining, is an earn-in partner in the orange. And now we've partnered with Rio Tinto Exploration for all of the blue, over 600 square kilometers in the Barosi concessions. And I believe what drove them there is the geological potential. We've drilled into skarns, copper gold, porphyry systems. For example, we've drilled 280 meters of 0.8 gold and 0.3 copper right from surface. You can see the terms there, but a great validation, not only the jurisdiction, but in our opinion, the geological potential that we see within this suite of exploration assets. So today, Calibre Mining, a junior gold producer, original guidance for the year was 140 to 150,000 ounces, around an all-in sustaining cost of $1,000 to $1,025 an ounce. We think there's opportunity to lower those costs, optimization within the operations, and you can see, as I discussed, a hub and spoke approach to grow organic production, and then also make new discoveries and expand resources with all the drilling that we're doing this year. So with that, I'll turn the presentation back over to Jay, and thanks everybody for your time.